What if I told you the world's greatest investor can often tell whether a company is worth investing in faster than most people decide? What to watch online. No secret algorithm, no crystal ball, and no insider information. Just a simple approach that helped him build one of the largest fortunes in history. That investor is Warren Buffett, and his strategy is surprisingly straightforward. Most people think successful investing is about finding the next hot stock before everyone else. Buffett disagrees. He starts by asking a simple question: do I understand this business? If he can't clearly explain how a company makes money, he usually won't invest. He believes investing in something you don't understand is like buying a business without knowing what it sells or who its customers are. That's why he spent years avoiding industries he felt he couldn't properly evaluate. Once Buffett understands a business, he looks for what he calls an economic moat. Imagine a castle surrounded by a wide moat that protects it from attackers. In business, a moat is a competitive advantage that makes it difficult for rivals to take customers away. This could be a powerful brand, loyal customers, unique products, or a strong market position. Buffett prefers companies that can stay successful for decades rather than those enjoying a short burst of popularity. Next, he studies the company's financial health. Instead of focusing on daily stock price movements, Buffett examines the business itself. He wants to see consistent profits, manageable debt, strong cash flow, and a history of growth. He treats buying stocks the same way someone would treat buying an entire business. If the fundamentals aren't strong, the investment doesn't make sense, no matter how exciting the story sounds. Another key part of Buffett's strategy is paying a reasonable price for a great company. Many investors hunt for the cheapest stocks they can find, but Buffett focuses on quality first. He believes a great business can continue creating value for years, while a mediocre business may remain disappointing even if its stock looks cheap. His goal is to buy excellent companies when they're available at fair prices and then allow time to work in his favor. One lesson Buffett repeatedly teaches is to ignore market emotions. When stock prices rise rapidly, many people become greedy and rush to buy. When markets fall, fear takes over and people sell in panic. Buffett does the opposite. He believes investors should stay calm and make decisions based on facts, not emotions. Some of his best investments were made during periods when others were too afraid to invest. Buffett also places enormous importance on management. Even a great business can struggle if it's led by the wrong people. That's why he looks for leaders who are honest, capable, and focused on long-term success rather than short-term headlines. He wants managers who treat shareholders like partners and make decisions that strengthen the company for years to come. Perhaps Buffett's greatest advantage is patience. While many investors constantly buy and sell, reacting to every market headline, Buffett thinks in terms of years and even decades. He understands the power of compounding, where gains generate more gains over time. Instead of trying to get rich quickly, he focuses on owning strong businesses and letting them grow. This long-term mindset has been one of the biggest reasons behind his extraordinary success. So, how does Warren Buffett pick investments? He understands the business, looks for a lasting competitive advantage, checks the financial strength, buys quality companies at sensible prices, ignores market panic, trusts strong management, and stays patient for the long run. It sounds simple, but in a world obsessed with quick profits and market hype, following these principles consistently is what sets great investors apart from everyone else. So, how does Warren Buffett pick investments? He understands the business, looks for a lasting competitive advantage, checks the financial strength, buys quality companies at sensible prices, ignores market panic, trusts strong management, and stays patient for the long run. It sounds simple, but in a world obsessed with quick profits and market hype, following these principles consistently is what sets great investors apart from everyone else. If you found this breakdown of Warren Buffett's investing strategy helpful, make sure to like this video and subscribe to the channel for more finance, investing, and wealth-building content. Every week, we'll explore the habits, strategies, and lessons used by some of the world's most successful investors and entrepreneurs, helping you make smarter financial decisions and build a stronger future. Thanks for watching, and I'll see you in the next video.